Hello everybody, welcome to today's special webinar. This is Terry Ryder, founder and managing director of hotspotting.com.au, and today we're going to be talking about where to buy and where not to buy. And I think it's a particularly apt topic at this time of year because we're about to embark on the Christmas New Year holiday season. A lot of people will be holidaying in kind of sexy places, perhaps coastal resorts, the Gold Coast, perhaps the Whitsundays, Byron Bay. And what we know to be true from years past is that many people, while they're on holidays, they're at leisure, they've got time on their hands, they tire kick real estate, and sometimes they're seduced into buying in locations where it's not particularly wise to buy, or at prices that are perhaps above the odds. Buying in locations that appear exciting, but maybe have a poor track record on capital growth. So we're going to be addressing today some of those places that people should be avoiding, but as well, we're going to be looking at the places that are good to buy as we get into that time of the year where people have a little bit of time on their hands, maybe more time to do some real estate research than they might otherwise have during the busy working year. We're going to be talking about the reality that we are living in changing times. There's no doubt about that. Some of the markets, particularly the biggest cities that were growing very strongly in the recent past, are no longer doing so. But what it's very important for people to be aware of that it's not all about Sydney and Melbourne. We do have some very strong growth markets around Australia. In fact, right now we have more markets with prices rising than we do with prices falling. And we're going to be focusing on for a period of today's webinar on what's really going on in markets around Australia. Where are markets rising? Where are they going sideways? Where are they falling? And we're going to talk about some of the places where I think it's good to be considering buying as investors or as home buyers, and some of the places to avoid. We've got a number of special offers today. In the lead up to this webinar, we invited people to send in their favourite holiday locations for potential discussion by me as part of today's presentation. I've actually chosen 5 of them that I thought would be good to focus on for various reasons. That would be part of the presentation a little bit later. And the best of those, the one I chose to be the best suggestion for people to invest in terms of locations where people might be holidaying this Christmas New Year season, will receive a free copy of our top 10 Best Buys 2019 report, which we're publishing this week. Retails for $154, so it's a great prize, and also a great way for anyone who gets a copy of that report to plan ahead for what they might think about doing as property investors next year. Also, another giveaway will be during question time at the end. I hope that my presentation will take about 45 minutes, leaving about 15 minutes at the top of the hour for you to type in your questions using the Q&A panel or the chat box that you see in front of you. The best question I receive during question time at the end will receive a copy of the latest edition of the Price Predictor Index, another great report that helps guide people make choices about where to buy and locations where prices are rising, as well as highlighting some of the areas that we regard as danger markets, the ones to avoid. There's also a special offer today on strategy sessions. I'll talk a little bit more about that later in the presentation. For this week only, we've reduced the price of our strategy sessions. That's a one-on-one strategy session with myself. There's also a free location report to go with that. Okay, the first thing to deal with is what's going on in media at the moment. It's particularly negative, particularly sensationalist at the moment, unreasonably so. I urge people who want to be serious about property investment and to be truly informed and have good information to avoid absorbing media sound bites and headlines. Just stop reading newspapers, basically, because what we have out there right now is what I call the great seething mass of media misinformation, and never more so than right now, because our major newspapers in particular are having a bit of a feeding frenzy about what they see as the downturn in what they call the Australian property market. Of course, we don't have an Australian property market. We have lots of different local markets, many thousands of them, in fact, and most of our major media comes out of Sydney. So we've got young, largely disgruntled journalists sitting in Sydney overly influenced on what's happening in their own backyard in terms of prices and extrapolating that into headlines of prices falling across the nation. We're seeing a lot of headlines like this at the moment. Australian house prices fall for 14th month in a row. We don't have such an animal as Australian house prices. The average, according to some measures, the average situation for the capital cities is a negative figure, but that doesn't mean prices are falling everywhere. It just means that Sydney's falling a lot and it's dragging down the capital city average. House prices falling at the fastest pace since the GFC. Well, they're talking primarily about Sydney. There's a whole lot of Australia out there that isn't Sydney, and it's very important for people contemplating property investment now or in the next 12 months to be aware of that simple truth that there's over 20 million Australians that don't live in Sydney, and most of the people living in different locations around Australia are experiencing something quite different to the Sydney experience in terms of what's happening with markets and what's happening with prices. CoreLogic publishes its monthly report on prices at the beginning of each month, talking about what's happened in the previous month. And it's noticeable, looking at the latest report, the one published at the start of December, that in most of the major market jurisdictions around Australia, according to this report, prices are higher now than they were a year ago. They kind of have figures on 14 what I would call market jurisdictions, the 8 capital cities. Each of those is a market jurisdiction, and then the 6 major regional areas: regional New South Wales, regional Victoria, regional Queensland, etc. So 14 major market areas, and of those, 9 currently have prices higher than 12 months ago. There's only 5 that are lower. Although Darwin is now starting to come into the positive, and according to some other research sources, Perth also is now back in the positive, although not according to the CoreLogic figures. We'll look at those discrepancies and the different numbers from different sources in a moment. But the problem is that the market where prices are down a lot, according to CoreLogic, other sources have different figures, but according to them, Sydney's down about 9%, and now that's dragging down the capital city average, and that means that the average result for the capital cities is a minus figure, even though 5 of the 8 capital cities have rising prices at the moment, and that's leading to careless journalists writing headlines that say prices falling across Australia. Simply isn't true. So yeah, another way of looking at the situation is this information also from CoreLogic, where they noted that the Australian Bureau of Statistics divides Australia into 88 sub-regions for the collection of data of all sorts, including price data. And according to CoreLogic numbers, in half of those sub-regions around the country, house prices are growing, and in many cases they're growing quite strongly. 40% of our capital city sub-regions have growing prices, according to their latest figures, and 60% of our regional sub-regions have prices growing. And it reinforces the reality that we're finding here at Hotspotting, and that is that most of the strongest growth markets right now are regional markets. The strongest price growth is happening in some of our regional markets, and the upturn in sales activity likely to lead to further price growth is certainly the strongest markets in those terms are regional, although there are still some strong situations in capital cities as well. I just want to highlight for you just how much difference there is in the price data depending on which source they come from. Media tends to treat each press release, each data release from major data sources like Domain or CoreLogic or the Bureau of Statistics as fact. They publish them. In fact, it's a fact that Sydney house prices have fallen 9% in the last 12 months. That's only according to one source. And as you can see from the numbers on the screen, other sources have different figures. And if you go through it market by market, city by city, you can see some quite startling discrepancies. CoreLogic has Sydney prices down 9%, but the latest figures from the Bureau of Statistics only 4%. SQM Research says 5%, Domain says 6%. So how much the market is falling, how serious the climb is, depends on whose numbers you believe. They all have different methodologies. They all claim their methodologies are the best, but they all have their flaws. And what they're attempting to do, in fact, is unrealistic in the first place. Trying to distill all the market activity in a city as large as Sydney down to a single figure. There's over 700 suburbs in the Sydney metropolitan area, and they're as diverse as Bondi Beach versus Penrith or Manly versus Campbelltown. To try and encapsulate all those different and disparate markets where different things are happening right now. It's not true that prices are falling everywhere in Sydney. The fringe areas, the cheaper areas are still holding up pretty well. That's true in particular in Melbourne, in fact. So to try and encapsulate all of that different activity, all the tens of thousands of sales, into a single figure saying Sydney house prices are falling 4%, or Sydney house prices are falling 6%. They're attempting the impossible, and so it's one of the reasons why we come up with these vast discrepancies from one source to the other. Look at the figures for Melbourne there on the screen. CoreLogic has Melbourne down 7%, but SQM Research has it down only 2%, and the last figures from the ABS still has Melbourne house prices up a little. Domain, their latest figures for Melbourne have it -3%. So there's quite a big disparity there. What we know to be true from looking behind the figures is that the top end of the market has fallen the most in Melbourne. The fringe areas, as I will demonstrate to you with some factual information in a moment, the fringe areas still have rising prices. So it's not true to say that Melbourne prices are falling. Some parts of the Melbourne market are falling, but there are significant proportions of significant submarkets in the Melbourne metropolitan area where prices are still very strong. Brisbane, Adelaide, all sources tend to agree that those markets are rising moderately, but the fact that they're rising at all, again, puts the light of those headlines telling us that prices are falling everywhere. Perth, well, again, it depends whose figures you believe. CoreLogic still has Perth down a little, so does Domain, but the Bureau of Statistics and SQM Research have Perth prices have stopped falling. And figures that aren't on the screen, but they come from the Real Estate Institute of Western Australia, they've had recorded a small increase in Perth house prices in October and then again in November. So 2 consecutive months, according to their figures, where prices have actually started to rise again. Hobart, well, Hobart's been the leading capital city in Australia for the last 12 months or so in terms of price cap, but how much? One source says only 2%, another says 9%, another says 15%, and another 19%. That's a hell of a discrepancy from the top to the bottom, a range of 2% growth to 19% growth. And the question for consumers is, who do you believe? How do you make sense of that? And it's very, very difficult to answer that question because, as I said, they all have different methodologies and they're coming up with these different results, which merely serve to confuse real estate consumers because it's never explained by the media. Darwin's back in the black, according to CoreLogic. Its prices are rising again, but the other sources still have Darwin house prices falling, including by 12% in the last 12 months today. And so that's what a huge difference. Domain says that Darwin house prices are 12% lower than a year ago. CoreLogic says they're 5% higher. Okay, so similar discrepancies when we look at the unit markets, but the most stark one is Hobart, where one source says the Hobart apartment market is down a little bit, but other sources say it's rising strongly, including as much as 15%. You'll note that the minus figures for Sydney are much lower for the apartment market than for the house market. Most sources have Sydney apartment prices down by only a few percent. And when we look at Melbourne, most sources still have Melbourne apartment prices higher than they were a year ago. Only CoreLogic has Melbourne apartment market slightly in the negative. So that's a very, very different picture from what we're hearing, seeing in the headlines. You know, prices falling a lot, markets collapsing. It's certainly not showing up in those numbers for the Melbourne apartment market, which is one that many people expected to perhaps have some price decline because of high levels of new supply, but it's holding up pretty well according to those numbers. But the point, looking at all those figures, is just how many differences there are when you compare one source to another and then to a third and a fourth. You know, the Brisbane numbers, Domain has Brisbane house prices down 7%. Other sources have the Brisbane apartment markets pretty much line ball compared to where prices were 12 months ago. It's very, very confusing, very hard to make sense of that. The point I'm trying to make to you is you can't treat the numbers published in media in terms of what markets are doing, prices rising, prices falling, as fact. Media does. They shouldn't, because they don't know any better, but they do. And be aware of that factor. Don't be spooked by the number published in today's newspaper in terms of Sydney house prices down 9%, because another source can come along next week and have a completely different number. There's not a lot of sophistication in the way media is reporting these situations. They're not particularly careful about being fair, balanced, or accurate. They're only interested in the sensational headline, unfortunately. Now, just to emphasise the point that we don't have a situation of declining markets everywhere, I'm going to give you some examples. Outer Ring Melbourne, now that we're seeing a lot of numbers published, CoreLogic figures are published more than anybody else's because they put out more press releases than anybody else. And you'll note that according to their figures, Melbourne house prices are down 7%. Other sources have much more moderate, more positive figures, but that's what CoreLogic and their figures are published most often because they're the most publicity hungry of the data sources. But it's not true of all Melbourne. These are also CoreLogic figures that I have on the screen, and you can see that in the outer ring areas, the cheaper areas, the ones where first home buyers are particularly active, and first home buyers are very active at the moment. That's something that's getting a little bit lost in the negative media, and that is that first home buyers are extremely busy in our biggest cities at the moment, more so than any time in the last 8 years, which I'll highlight for you in 5 or 10 minutes time when I get to that particular part of the presentation. But you can see that in up in the northern areas, the local government areas of Whittlesea and Hume, many of the suburbs up there are having still very strong price growth. They're up 10%, 12%, Epping's up 17%, and there's a couple there, Craigieburn and Meadow Heights, where the median house price is 20% or more higher than 12 months ago. And the point is, in the last quarter, most of these areas have prices still rising. So we're still seeing strong price growth in those cheaper areas and the outer ring areas of the Melbourne metropolitan area. On the left-hand side of the screen, you can see some figures for some of the suburbs of the Casey and Frankston local government areas down on the far southeast of the Melbourne metropolitan area. The Cranbourne suburbs rising very strongly. Frankston is up 13%. Frankston North is up 17%. Prices still very strong in these areas. So when you read about how much Melbourne house prices are falling, losing $1,000 a week, some headlines have been telling us it certainly isn't true of these areas. So too much generalisation and media coverage of what's happening with prices, and the general claim of prices collapsing is not true of anywhere, but it's certainly not true of many, many locations where prices are still very strong, including those that I've highlighted on the screen. We also have some very strong markets in regional areas. Regional Victoria is probably the #1 market in Australia in terms of how much prices have risen in key regional parts of Victoria in the last 12 months and are still rising. Now, if you look on the right-hand side of the screen, some of the suburbs of the city of Greater Geelong, just outside Melbourne, fantastic price growth. Anybody who bought there 12 or 18 months ago would be a very happy home buyer or investor. Suburbs like Corio and Norlane are up 28-30% in terms of median prices. Down the bottom of the right-hand side, I highlight how much prices in those areas have risen in the most recent quarter. So prices still rising in some of those locations. Now, down in the outside the Melbourne metropolitan area to the southeast, we have towns like Pakenham, Officer, Warragul. Very strong price growth has occurred there. Big population growth, a lot of people sort of moving out there because it's more affordable, different lifestyle, not just people, but also businesses. Land prices are cheaper. You can have cheaper premises for your business. Out in those places, transport links back to Melbourne are pretty good. So we're still seeing very, very strong price growth in those locations as well. And as I say, I think as a general comment, regional Victoria, the strongest market in Australia in terms of what prices have done in the last 12 months and are still doing. Now, Sydney prices, generally speaking, aren't holding up as well as Melbourne. Melbourne, I think, is showing a great deal of resilience. It's only really the ultra top end where we're seeing considerable price decline. The middle market in Melbourne is holding up quite well, a little bit. Overall, you'd say the prices are down a little bit, and as I've just shown, in the outer ring areas, prices are still up very strongly. To a certain degree, we're seeing signs of that in Sydney, not quite as well as we are in Melbourne, but as I highlight in the slide on the screen, in some of those areas, some of those suburbs in the far west and the far southwest, like Camden, Campbelltown and Penrith, some of those suburbs still have prices higher than 12 months ago. Camden South up 8%, Thornton up 8%, etc. A few suburbs up 5 or 6%. Increasingly, some of those cheaper areas are also lapsing into slight negative figures, but the point is that prices are holding up very well in those outer ring areas. Not as strongly as Melbourne, but still quite strongly. And one of the reasons for that is that first home buyers are very active. I'll show you some figures in a minute to illustrate that point, but it's rather ironic that in our most expensive city, first home buyers are perhaps more active than anywhere else in Australia, which tends to put the lie to the general media headline about an affordability crisis. Nobody can afford to buy, a whole generation doomed to a lifetime of renting, while first home buyers are out there buying in large numbers. We just had lending figures out this week showing that lending for home buying actually increased in the most recent month, for which figures are available. And a large part of the reason for that is the activity of first home buyers in cities like Sydney and Melbourne, and that's keeping prices relatively strong in those outer ring areas, such as those highlighted on the screen at the moment. Many regional areas in New South Wales are doing pretty well as well, and they've been led in the last 12 months by Newcastle. Newcastle suburbs on the right-hand side of the screen, they're highlighted their rise in median prices in the last 12 months. So you can see there's quite a number of them have had growth somewhere between 10 and 20% in their median prices. And that started to ripple out to the towns of the Hunter region, where locations such as Maitland and Cessnock, Muswellbrook have had double-digit growth as well. And we're going to expecting more growth in the area because it's really just starting. A cycle is just beginning. One of the points to take home from what I'm telling you is that we don't have one market in Australia, and many of the regional areas are on different cycles or different parts of the cycle to their capital cities. So what we're seeing in both New South Wales and Victoria is the capital city markets generally are in decline. The key regional markets are actually rising. So we're going to be seeing some strong growth in some of these places as we get into 2019. It's certainly not going to be a situation where it's prices falling everywhere, which is what the newspapers are suggesting or claiming. The truth is something very, very different. We're starting to see some of the regional markets of Queensland improving. They're being led by the Sunshine Coast, which I will talk about, refer to a number of times in this presentation. But the Sunshine Coast is the #1 market in Queensland at the moment. It's got a lot of money being spent on infrastructure, over $20 billion being spent on infrastructure and property development. That includes recently completed projects, those underway and those that are expected to happen soon. The hospital precinct has been the game changer, but there's other things happening. The illustration on the screen actually depicts what the new Maroochydore CBD is going to look like. The construction of that is kind of underway now. They've started sort of site works. That'll evolve over the next 10 or more years with offices, retail, apartments, hotels, all kinds of elements on what used to be a golf course in central Maroochydore, which is a very central suburb in the Sunshine Coast coastal strip. But as you can see from the numbers on the right-hand side of the screen, there's been a lot of price growth in the Sunshine Coast. Most suburbs have had double-digit growth, headed by Minyama Canal residential suburb with a median price about 1.3 million. according to the CoreLogic figures, the median price has risen 46% in the last 12 months. I don't really believe that number. I think it might be a statistical aberration, but nevertheless, that's what the number says. Regardless of whether it's true or not, most suburbs, Sunshine Coast, are rising. Noosa, which has done very little, in fact, prices were very weak for most of the past 10 years, but it's joined the Sunshine Coast party, and so now Noosa, both units and houses, and nearby suburbs like Sunrise Beach and Sunshine Beach have had strong growth in their prices in the last 12 months. And I think it's going to continue because the Sunshine Coast is at the beginning of a growth cycle in its economy and its property market. Okay, first-time buyers particularly active. The numbers show us that first-time buyers have their highest market share since 2010. So while investors are less active than they were before, first-time buyers are particularly active. We've seen the average loan to first-time buyers rise 10% in the last 12 months. Also in the last 12 months, the total of loans to first-time buyers has risen 30%. But in New South Wales, particularly Sydney, it's risen more than 70%. It's a massive increase. So again, rather ironically, in our biggest and most expensive city, first-home buyers are particularly active. In New South Wales, a year ago, first-home buyers were comprised about 10% of buyers, and now they're 1 in 4, about 25% of home buyers in New South Wales are first-home buyers. They're also strongly active in other places, including Victoria and Western Australia. So it's very important to be asking the right questions right now. And the question I get asked most often is this a good time to buy? And I think it's the wrong question. The best question to ask is, where is it a good time to buy? Because I think it's always a good time to buy somewhere in Australia, because we have this vast country with many different markets, all at different parts of the cycle, all doing their own thing according to what's happening with local conditions. It's timely and apt to ask questions like this. Why all these differences? We haven't had a national property boom over the last, say, 5 years. We've had one in Sydney, we've had one in Melbourne, but Canberra hasn't boomed. Perth has been going backwards. There's been very little growth in Brisbane or Adelaide. Why all these differences? And the answer is that property markets and their conditions, whether they're rising, falling, or going sideways, they arise out of local conditions. It's what's happening with the local economy, infrastructure spending, population growth. And we've seen that with Sydney. If you look at the rankings of the state and territory economies, which is on the left-hand side of that particular table on the screen, as they're ranked according to ComSec State of the States report. That's the general rankings over the last few years. And on the right-hand side, how strong the capital city property markets have been. There's an almost perfect correlation between the two things. It just illustrates the point that what's happening with major markets very much arises out of what's happening with the local economy. New South Wales economy, particularly Sydney, has been very, very strong. It's been the #1 economy until very recently in the nation for several years, and Sydney's been the leading market. Victoria #2, Melbourne #2 in terms of markets, right down to the bottom where the weakest state and territory economies have been Western Australia and the Northern Territory, and Perth and Darwin have been the two capital cities where prices have actually been going backwards while they've been going forward in Sydney and Melbourne. Sydney's been very much driven by its strong economy, big infrastructure spending has been a huge influence there. Population growth has been strong, particularly overseas migration. I can't emphasise enough how important that infrastructure spending factor is. Tens and tens of billions of dollars are being spent, have been spent, or will be spent in Sydney. It's been a big reason why the economic activity has been so strong in that city, creating many thousands of jobs, and that's a huge influence on what happens with property markets. Hobart has, throughout 2018, been the strongest of the capital cities. Property is selling there the fastest, and the price growth, according to most data sources, has been the highest amongst the capital cities. There have been some regional areas that have done better, but amongst the capital cities, it's been very much the Hobart story. Now, that has coincided with a massive improvement in the Tasmanian economy, and that's not a coincidence. Tasmania historically has been ranked 8th and last in the ComSec State of the States report, but for the last couple of years it's ranked 4th. Very, very high ranking for Tasmania compared to where it's been traditionally, historically. And out of that big improvement in the Tassie economy has come the Hobart, what I would call a mini boom. It's certainly not a prolonged and high boom such as we've had in Sydney until recently. Nevertheless, very strong price growth in Hobart. So we come to the core part of the presentation is where next, where to buy and where not to buy, as we going through this period of great change in Australian property markets. And I think that the catch phrase to take away with you is think small for big growth. It's very much moving forward going to be about the smaller capital cities and some of our more important regional cities. It's worth remembering that some of the best growth we've had over recent history has been in some of our smaller capital cities. The table on the screen divides the last 30 years into 5-year periods and lists the capital city which has had the highest growth in house prices and how much prices have grown in that 5-year period. And you'll note that there's only been one 5-year period where Melbourne has led. There's only been one 5-year period that's the most recent one in which Sydney has led. And the other 5-year periods, it's been Brisbane, Darwin, Perth that have been the market leaders. And in fact, the strongest performance we've had at any of those 5-year periods in the last 30 years has been Perth in that period from 2003 up to 2007, when there was a phenomenal growth in Perth property prices, double what we've seen in Sydney recently. So just putting that in perspective, that some of these smaller cities do have periods of very strong growth. And I think we're coming into a period now when those smaller capital cities are going to be some of the market leaders. Some of the clues to where prices might be rising generally, up cycles that tend to be led by the top end of the market. We saw that in Sydney where the big boom began with the expensive suburbs and rippled out. In Melbourne, it began in the swanky $1 million suburbs of the inner southeast and rippled out to the middle market. And right now, it's still strong in the outer ring. But that's the normal cycle. And it's interesting to note that in some of the cities where generally the price growth numbers aren't that strong, it's useful to note that the top end of the market in those cities actually has been strong. In Perth, where we haven't seen anything much in the way of price growth in the last 12 months, the $1 million suburbs have all been growing pretty strongly. Most of the suburbs of Perth, with median house prices above $1 million, have had double-digit growth in their median prices in the last 12 months. We've seen a similar thing happening in Adelaide, and we've seen it happen also in Canberra. Now, those are three of the smaller capital cities where we're expecting to see some pretty solid growth in 2019. We haven't seen that syndrome yet in Brisbane and Darwin. And why is it so? Well, Western Australia and Perth provides a good illustration. The Western Australian economy has been suffering, but it's now recovering. The resources sector is revitalising. Jobs are being created. Economic growth is happening again. Population growth is rising. And when the economy improves like that, the first people to feel it, to notice it, are the people who own businesses or earn the higher incomes. And so that starts to translate into purchases at the top end of the market. And so we start to see that part of the market moving first. So we're seeing that in Perth, we're seeing it in Adelaide, we're seeing it in Canberra right now. Another clue to an improving cycle coming along, and it comes out of what's happening with vacancies and rents. Now, what we know to be true is that before Sydney moved into its phase of strong price growth around about 2013, prior to that, we had a couple of years where prices didn't do much, but rents had grown a lot. So it's a factor to look for. Now, Hobart's done that. It's got very low vacancies and it's had very good rental growth. And what's followed on from that is strong growth in prices in Hobart. In Canberra, vacancies almost as low as they are in Hobart, well below 1%. Strong growth in rentals in Canberra, both for apartments and for houses. And we think that that's another sign, taken in conjunction with rising activity and also price growth on the top end of the Canberra market that we're going to see better performance from Canberra next year. Adelaide vacancies are low, and we're seeing some pretty solid rental growth, not as high as Hobart and Canberra, but solid nevertheless. And that, I think, is another sign that the Adelaide market is on the move and is going to do better in 2019. We're expecting Brisbane and Perth to show signs, and that's because vacancies have come down a lot in those two cities. Over the last 12 months, we've seen a significant decline in vacancies and the first glimmers of a return to rental growth. So keep watching that space for that particular factor in Brisbane and Perth, but it's certainly evident in Hobart, Canberra and Adelaide. So to answer the question, where next? Where are the good places to be considering buying in 2019? Certainly Canberra, the number 3 ranked economy of the ACT. It's got the highest average wages in the country, the lowest unemployment consistently, very low vacancies, very strong rental growth relative to other cities. Some analysts are forecasting that Canberra will have the highest price growth over the next few years. It'll certainly be a contender, I think. Certainly one of the cities with the best price growth next year and the year after, I think. And as I said earlier, its top-end suburbs are showing strong price growth, and there's an uplift in activity there, and where demand is rising, prices usually follow. Another possibility is Perth. I often refer to Perth right now as the city of opportunity because it's moving into a recovery mode. There's no doubt about that. So many statistical markers confirm that. Prices are down after several years of decline. So the pricing is good. There's not a lot of competition in that market yet. People will pile into Perth and they read there's a boom on, but most people, because most people are herd animals, the smart people will be looking there now because there's great opportunities in Perth. The economy is growing again, jobs have been created, population growth returning, sales activities picking up, the top end has moved, vacancies have fallen, everything's falling into alignment for Perth to be a city of growth in terms of prices in 2019. I know that the latest figures from the Real Estate Institute of Western Australia show that prices rose in October in a minor way and also a minor growth again in November, the first months that we've seen price growth in that market for several years. Sign that things are on the way back there. Adelaide, I regard as the most underrated city in Australia. It's so much better in terms of its economy and what's happening there, infrastructure spending, than people realise it. It's stigmatised. People have an attitude to Adelaide that's a non-growth city, and it has had very strong growth in periods in the recent past. I think it's coming into a period of growth. There's a lot more happening in Adelaide that people realise. It's the high-tech innovation capital of Australia, it's the renewable energy capital of Australia, and it's also got $90 billion worth of naval contracts, building vessels for the Navy starting now. I think some big things are going to happen in the Adelaide economy, and out of that, the Adelaide property market. And its top end is already moving, and sales activity is rising steadily throughout this year, and I think we're going to see some pretty good growth there next year. Brisbane, well, a lot of people have predicted growth for Brisbane over the last few years. I think some people simply assumed that Brisbane was going to boom because Sydney and Melbourne had, and of course it doesn't work like that. Brisbane just hasn't had the economic conditions, it hasn't had the drivers that have been present in Sydney and Melbourne, but that's starting to change. The population growth numbers are now favouring southeast Queensland again. The economy's improving, infrastructure spending, that's the big one. It's really picking up. It's been missing for the last several years in Brisbane, but that's changing. There's tens of billions of dollars coming up in terms of spending on infrastructure in Brisbane. And you've got the price comparison with the two biggest cities, the yields comparison. Investors increasingly are looking at Brisbane as a place with more affordable prices, better rental yields, and improving prospects for growth. The one market to avoid is the inner city apartment market, which I will talk about in a little while. There's plenty of good options in regional Australia as well. I could spend an hour talking about some of the prospects, but we don't have time for that. But an example of what's happening in regional Victoria, is Ballarat. That's a very strongly growing market, a very strong city in its own right, but it also benefits from its good links back to Melbourne by road and by rail. You can conceivably buy very affordably in Ballarat and still have a job in Melbourne, although you don't need to have a job in Melbourne because there's plenty happening in the local economy. You can, median prices for most suburbs, 300,000s, very good rental yields. So out of Melbourne, we're getting a lot of interest in Ballarat, also Bendigo for very similar reasons, both home buyers and investors out of the capital city showing increasing interest in places like Ballarat and Bendigo. Townsville's a market that's been in the doldrums in North Queensland, but it's on the verge of a big economic comeback. The illustration on the screen is the new sports stadium that's currently under construction. It's one of a number of big projects. You add up all the things that are happening in Townsville or in planning for Townsville, the stadium, the university expansion, the water pipeline duplication, which is really important, water security to that city, highway upgrades, port expansion, all sorts of things. It's over $25 billion for a city of that size. That's massive. Lots of jobs being created. Right now, prices are down. It's been through a bit of a downturn, like many parts of regional Queensland in the last few years, poised for a big upturn. So it's one to keep in mind. There are lots of other places around regional Australia to consider in Newcastle and in New South Wales, rather, places like Dubbo, Wagga Wagga, Tamworth, Orange, Armidale, plenty of places, particularly in the eastern states. Regional markets are actually outperforming their capital cities right now. That's where the growth is primarily going to be found in those states moving forward, whereas in states like South Australia and Western Australia, it's very much about the capital cities there. So turning to some of the places to avoid. And this is the trap at this time of year when people go on holidays to places like the Gold Coast and they're at leisure. They might go around and have a look at real estate. It's all very glitzy and quite alluring, and it's easy to be seduced by an apartment that's high up and has spectacular views of the ocean or back to the hinterland. And a lot of people fall into that trap this time of year. So it's very important to be aware of what makes sense and what doesn't. Certainly the Gold Coast has been a strong market in recent years. It had a mini boom in the lead up to the Commonwealth Games because there was a lot of infrastructure built for that. And so there was growth, but particularly in the housing market. A lot of people who think of, in terms of investment in the Gold Coast, they think about Surfers Paradise. They think about the high-rise market. That's the market to avoid. If you want to invest in the Gold Coast, look at the housing market inland. It's a lot more solid. That's where the people who actually live and work on the Gold Coast are, whereas the high-rise market's about speculators and about tourists. And it's a lot more fragile and volatile and sometimes quite dangerous. Now, what I've got on screen is the long-term capital growth. That's the average annual growth and median prices in those suburbs over the last 10 years. And you can see that for Southport and Surfers Paradise, it's a minus figure. And that means that prices for apartments on average in those locations are lower than they were 10 years ago. Main Beach and Broadbeach have had growth, but very minor growth, just between 1% and 2% per year. So poor growth. And some of them have had prices on average falling in the last 12 months. The median prices for Surfers Paradise, Broadbeach and Southport are all down compared to 12 months ago. So it's a danger market. If you must invest on the Gold Coast, look at the housing market where there's real solid demand by people who live and work on the Gold Coast. But don't be seduced by the glitzy high-rise. Brisbane and the city still one to avoid. Gradually, this absorption of the oversupply, but you can see from the vacancy rate figures on the screen, still very high. Brisbane CBD 7.5%, according to the figures from SQM Research, and nearby suburbs like Fortitude Valley and South Brisbane, vacancies close to 6%. So if you're interested in that market, I'd just wait a little bit. Long-term growth rates down at the bottom of the screen, they're also pretty poor on those markets. They're not markets that traditionally show strong capital growth. But right now, if vacancies as high as they are, they're ones to avoid. There was recovery underway in many of the central Queensland markets that are impacted by the resources sector. Many of them gone through some major downturns, but they're now coming back. Vacancies are down, sales activity rising. We're starting to see prices rising. Some locations, Mackay in particular, is coming back strongly. The coal mining town of Moranbah, 23% rise in the last 12 months, but that's very deceptive because it's rising from a very, very low base. Median price at one point was over 700,000. It dropped to below 200,000. It's now starting to make a bit of a comeback, but it's got a long way to go. Similar things happening in Emerald. Just be aware that some of those figures are a little bit deceptive, and keep in mind how volatile these markets that are dependent on the resources sector are. They go from boom to bust, and when the bust is on, it can be very, very ugly if you're caught owning real estate in those locations. So don't be seduced by the fact that those markets are improving. Mackay's a little bit different because it's a substantial regional centre in its own right, but those are smaller towns which are almost totally dependent on the resources sector, like Moranbah. Just don't be seduced by the fact that things are improved and prices appear to be rising. Just before I talk about some specific locations that were nominated by you, our customers, I just want to, one of our special offers today is the strategy session that I offer, where you have a 1 hour one-on-one with myself. It's usually via Skype or Zoom, because I'm in one location, you're probably in another. And it's an opportunity to have a one-on-one, talk about your situation and get some feedback from an independent expert on what you're considering doing or what you should do. A lot of the questions I get asked by people are about location. Should I buy in this location or own property in this location? Should I sell it or should I keep it? It's very hard to answer those questions without knowing more about your circumstances, because there's not a one-size-fits-all answer. The answer depends on your personal situation very often. So it's only when we sit down and have a discussion of about your situation, what you own, how much you earn, where you own property that you currently own, it all has an influence on what you should do next. I recently did a strategy session with a customer where the main conclusion was that something needed to be sold to reduce debt. It's not always about where you should buy, but sometimes it's about what should we do to improve our situation. And sometimes the answer might be, perhaps if you sell a particular property that's in your portfolio, you can improve your situation. So that's on offer today. The price is normally $300 plus GST for that strategy session. This week only, it's $250 plus GST, and I'll touch on that again at the end of the presentation. I did ask for people, as they registered for this event, to give me the suggestions of some of their favourite holiday places, and I would choose 5 of them to discuss in terms of are they good places to consider for buying. I'll just remind you to go forward. Please, if you've got questions, type them into the Q&A panel or the chat panel in front of you now. There is a prize for the person who asked the best question today. It would be a free report valued at $154. So please put in your questions, locations you may be interested in, things you might be considering doing or not doing. Start thinking about your questions, which I will answer in about 5 minutes when I just finish the main part of the presentation. But this is some of the suggestions that came in from people as they registered for today's event. I've selected 5, and the best of them I'm going to give a prize of the new edition of the Top 10 Best Buys report. Now, Cheryl suggested Caloundra on the Sunshine Coast. Certainly a good place to consider. The Sunshine Coast is a growth economy. It's a growth property market for all the reasons that I mentioned on screen, the big $20 billion infrastructure spend, the new medical precinct, and a lot of other reasons. Prices are rising. That southern part of the Sunshine Coast is one that I particularly favour because it's close to the university and it's close to the medical precinct. It tends to be the more affordable part of the Sunshine Coast market, and it's improved a lot. Caloundra used to be considered a little bit down market. It had a daggy image, but it's changed enormously in recent years. It's certainly been many improvements in terms of the lifestyle component of that market. So I think, Cheryl, that it's a really good one. Great place to take a holiday, but it's also a very good place to consider for property investment. Cheryl and another of our customers, Sue, suggested Currumbin on the Gold Coast. So I had a bit of a look at the Currumbin market, but it's like what I said earlier about Surfers Paradise, Broad Beach, Main Beach, etc. Currumbin is essentially about the apartment market, and that's not really the market to be in the Gold Coast, I don't think. There are some houses in Currumbin, but very few sales, only 25 sales in the last 12 months, which means that the median price is up 14%, but it's very misleading because when the sales sample is that small, you quite often get misleading data. And just to contradict things, the vendor discount according to the CoreLogic figures is 13%. So that tends to conflict with the idea of prices rising 40%, but you've got a small sales sample, so the numbers are misleading. The unit market, median price, 510,000. That's down 8% in the last 12 months, and the long-term growth average over 10 years, 1.8% a year. So very poor capital growth performance. So I would be suggesting, Cheryl and Sue, that in terms of investment, there's better places to consider than Currumbin or anywhere that's essentially about apartments on the Gold Coast. Murray and Debbie suggested Port Macquarie, and that's a market that we have liked. We follow Port Macquarie quite closely. It's done quite well in recent times. It's a good local economy. It's not just about tourism. It's a solid regional centre, a solid market, consistent sales. But it did have a market peak about 2015. It's tapered off a bit since then. So suggest that right now the market's not particularly on the rise. And you can see the median house price has risen about 3%. In the last 12 months, the median unit price 1.3%. In the last 5 years, we've seen growth of 45% in that market. So it's been a pretty solid market, not the best in the country, not a boom market, but solid. And its long-term growth rates, again, solid, but not spectacular. So I'd say, Murray and Debbie, that Port Macquarie is certainly the many worst places to invest in Australia. I think Port Macquarie is going to be solid going forward, but it's not the best. I always think you should ask yourself the question when you're thinking about investing in a location, is this the best place I can buy in Australia? Because all of Australia is your market. Where's the best place I can buy to get the best outcome? Is Port Macquarie the answer to that question? I would suggest probably not. At the same time, it's a good, solid place. You're certainly not going to suffer too much if you own real estate in Port Macquarie, but you're going to do better if you own in other places, I would suggest. Roberto, you suggested the Glenelg area of Adelaide. Well, I like Adelaide a lot. As I mentioned earlier, very underrated city. We're going to see some pretty good growth there in 2019, I'm quite sure. Glenelg is a good place to consider. Seaside suburbs, sort of a little bit south and west of the Adelaide CBD. Good suburbs. On Glenelg itself, the median house price is well over $1 million. And it's risen 31% in the last 12 months. But again, that's misleading because of a small sales sample, only 24 sales. Those markets, those suburbs have more apartments than houses. But those apartment markets have shown solid growth in the last 12 months. Median unit price for Glenelg is up 6%. The median unit price for Glenelg North also up 6%. Yields are pretty good. Not a bad market to consider in the context of Adelaide being a good market to consider. If you're buying in Adelaide, I'd be buying, I think, houses. These suburbs, Roberto, are more about apartments, I think. In Adelaide, there's so many value for money houses to be bought in good locations. That's what I'd be considering primarily. And now the fifth suggestion that I chose to focus on came from Sue, where she talked about Nelson Bay in the Port Stephens area, not far from Newcastle. I just put a quote up there from the most recent edition of the Price Predictor Index. Port Stephens, yeah, and it noted that the Port Stephens area has producing growth markets, demand rising in number of locations, and very solid markets in others. and some have had double-digit price growth, including Nelson Bay up 17%, Madawi's up 12%. So just focusing on Nelson Bay, because that's the suburb that you nominated, Sue, median house price 675. That's 17% growth in the last 12 months. So it's pretty good growth. And it's up 71% over the last 5 years. So basically what I'll be suggesting to you is that this is a pretty good location, but I wouldn't be buying there now because it's already had such strong growth. The best time to buy there was a couple of years ago. 71% growth in the last 5 years. It's got some ripple effect from Sydney and from Newcastle, where markets have been strong. I wouldn't be rushing to invest there now. I'd be very happy if I owned real estate that I'd bought there, say, 4 or 5 years ago. So for me, the winner is Caloundra. Cheryl, you win our prize, which is the new edition of the Top 10 Best Buys report, the National Top 10 Best Buys, which we're publishing this week. You also get a free copy of the No-Go Zones report, which is the flip side. So 2 reports. One tells you the best places to buy next year, and the other one tells you the places to avoid. But I just think that of the locations that were suggested by our the customers as they registered for this event, this is the one that's got the growth economy and more upside to come. And Caloundra in particular is an area that's been underrated and disregarded perhaps in the past, but it's really the lifestyle there has improved a lot. And that southern part of the Sunshine Coast, which is more affordable than some other parts, I think is going to have still some pretty strong growth. So Cheryl, we will be contacting you the next day or so and sending you your price for making the best suggestion amongst those who registered for the webinar today. So now we come to that time for some questions. And again, we've got a giveaway. The best question that comes through in the next sort of 10 minutes or so, so a free copy of the latest edition of the Price Predictor Index, which retails for $154. And we do have, plenty of questions here at the moment. So I'll work my way through as many as I can. Timothy is asking, what is your view on Cairns currently? Hasn't shown much growth in recent years. Any sign of recovery? Well, it's kind of a pretty solid market, Cairns, but it's just not going ahead at the moment. And it's not certainly not a dormant economy. It's quite busy and vibrant, but its property market hasn't really picked up, Timothy. It doesn't have anywhere near the growth drivers that we see coming up for Townsville. Certainly, if I was considering North Queensland for investment, I'd be opting for Townsville rather than Cairns. It just has more coming up in its future, a lot more. Alistair, referring to my discussion of the variation in statistics, what's your advice in choosing which statistic to use? Look, Alistair, I've got to tell you that it's all dodgy data to a certain degree. It's all rubbery figures. They're attempting the impossible, trying to tell us what Sydney house prices or Melbourne house prices are doing in the last week or the last month or the last 12 months, because it's just such a massive task to try and distill those transactions down to a single figure. I like using figures from SQM Research, Louis Christopher's company. You get good data that's freely available on vacancy rates, how much stock's on the market. Here's an asking prices index, which I think is quite a good indicator. Of the major data sources, I prefer Domain to CoreLogic. I think Domain is very, very careful with its data, a lot more particular about the integrity of its data. But there's no one that stands out where you can say you can believe these figures as fact, because it's not a matter of fact. It's a snapshot according to one source based on their methodology. Alistair also asking if you could choose three indicators, top three indicators to drive your investing decision, what would they be? Alistair, I'd start with the local economy. What's happening with the local economy? So you look kind of big picture, a city or a town, a regional city or a local government area. What's driving the economy there? What's happening with infrastructure? Is the existing infrastructure good? And is there new infrastructure coming up in terms of investment on new facilities? And then I would go down to the local level and look what's happening with sales volumes, demand. So economy, infrastructure, demand. And there are ways of measuring that that you can source. That's what the price predictor is about, that demand factor. We look at every town and suburb in Australia and look at what's happening with sales volumes, because that means what demand is there in the market quarter by quarter, and if it's rising, then prices are likely to follow. But good questions, Alistair. Thanks for that. Neil's asking about Nowra. I don't have a particular, off the top of my head, Neil, view on Nowra. I know it's a good solid market, sort of down there in that area, south of Sydney, not far from, picking the right place, not far from Wollongong, but there's nothing that particularly stands out for us. So we look for drivers of growth. We look for markers that put that location on our radar screen as potential future hotspots. And we don't see anything dramatic happening that's going to make Nowra an outperformer. Anonymous attendee is asking, you mentioned that I mentioned Wollongabba, not a good investment. Well, inner city Brisbane apartments with vacancies there just need to watch and wait until they improve. There'll be opportunities to buy well there. What about East Brisbane? Well, right next door to Wollongabba and Kangaroo Point, I would be looking at the housing market there rather than the apartment market, because that's probably where you're going to get better growth. Michael was asking, what about Gladstone right now? Gladstone, I mentioned that some of the markets, Michael, in central Queensland, particularly Mackay, are on a comeback trail. We're seeing evidence of much better performance there now. Gladstone hasn't got on board yet. Vacancies have come down a lot. That's one factor in Gladstone's favour. But we haven't seen any sign of a real pickup in sales demand. We haven't seen any sign of a pickup in prices yet. I noticed some observers like Heron Dyed White are starting to see signs of improvement. So we're probably at that point where Gladstone's going to turn around and do better in 2019, but it's not one that's really hasn't shown the sort of uplift signs that we've seen in Mackay as yet. Hilda mentioned I'm planning to buy in Safety Bay in Perth. What's my opinion? Depends why you're buying, Hilda. Is it you're buying a home or are you buying for investment? I think you're talking about down in the Rockingham area, which eventually is probably going to get some uplift. We're no signs of it really yet. There are probably other parts of Perth. If I was buying for investment, I'd be focusing perhaps more on the Stirling local government area or the Melville local government area, or in particular Joondalup up in the north, where it's quite affordable and great infrastructure. Aaron's asking my thoughts on the Adelaide market in the future. Do you think it has the potential to be the next Hobart? Look, I do. As I mentioned earlier, we have a very positive outlook for Adelaide, Aaron. And I'd like, should perhaps do an entire webinar just on Adelaide to explain why. There's a lot coming up in its economy and its infrastructure spending. It's great value for money. I think it's going to be one of the markets it's going to do better. It's been chugging along very steadily for the last 5 years. I mean, some of the data sources have noted that, like Domain, that it's shown some growth each year for the last 5 years. It just hasn't boomed. But I think there's a boom within. Certainly Adelaide has the potential to boom. I think it's going to do a lot better next year. Susie's mentioning that I mentioned Nelson Bay, probably not great to buy there now because it's already had really strong growth. Would that be true of Gosford on the Central Coast? Well, I think so, actually. The Central Coast has been one of the strong markets. It's certainly got a ripple effect from Sydney. People are looking there saying it's a lot more affordable. It's not far from Sydney. Let's buy there. So there's been some great growth in the Central Coast in the last couple of years. There's plenty more coming up there. So, you know, if you buy there, you're going to do well long term, I think, Susie. But the best time to buy there was a couple of years ago, certainly. Yeah, I mean, it's not the worst place to invest. There's still going to be growth there going forward. I would just, again, ask that question. We should always ask, is this the best place in Australia right now to buy an investment property? And I would suggest in terms of where the Central Coast is in the cycle, that might be better places to consider. Michael mentioning that if you own property in Rockingham, which has dropped in recent years, should I hold? Again, Michael, it really depends on your circumstances. That's why I'm talking today about the possibility of a strategy session. That's one of the things I have a special offer on today, and I'll talk about that in a moment again. But if we sit down and have a strategy session, we can have a one-on-one via this medium like Zoom or Skype, and I can find out more about your personal circumstances, because that is what will dictate the answer to your question. It's not so much about is Rockingham, what's happening in the Rockingham market. It's the answer is dictated by your circumstances, your personal situation. And I can't answer the question until I know more about you. So I urge you to take advantage of the possibility of a strategy session. And we do have a special reduced price on that for this week only, so that I can talk through your circumstances with you and give you a definitive answer to the question. In simple terms, the Perth market is showing signs of recovery and rising. So if now would not be the time to sell a property in Perth, I certainly would be better in 12 months from now. Anna's asking, do you take into consideration schools when looking at areas? Well, certainly do. It's just one of many considerations. We also consider medical services, public transport, shopping, but schools are very important. Most of our suburbs in our major cities have schools, but you certainly would consider them. And many people buy according to wanting to be in a particular zone so they can send their kids to a particular school. But as investors, schools are just one of a number of things you would consider. Alison is asking, what are your thoughts on buying an investment in Mandurah? Look, as Perth moves into recovery, Mandurah is likely to follow because it's quite well connected. It's a place that's very interconnected with Perth and also the Western Australian economy. A lot of people who sort of have bought there because it's a lifestyle location, and people who have earned big money in the resources sector have bought property there in the past. So I think Mandurah is going to improve. It's been quite solid during that downturn period, more solid than most regional locations in Western Australia. So certainly not the worst to consider in Western Australia, but just keep asking yourself that question. Everybody, Alison and everybody else, when you're considering a location, is this the best place in Australia for me to buy an investment property right now? I don't think Mandurah is probably the answer to that question. It's not the worst answer, but it's probably not the best either. Anna's asking, on the Sunshine Coast, what's your opinion of the best area for investment other than Caloundra? Yeah, I mean, there's lots of answers to that question. I've been considering somewhere like Nambour. It's one of the more affordable parts of the Sunshine Coast market. It's got really good infrastructure. It's on the railway line. It's improving all the time in terms of its infrastructure and its lifestyle offer. It's considered down market, and a lot of people kind of make jokes about Nambour, but really it deserves a better reputation than it has. I'll be considering a location like that. Certainly demand is rising there, and out of rising demand is likely to come rising prices. Richard is asking, do you see house prices dropping in the next 12 to 18 months in Epping, South Marin, Ladle or Thomastown? Now you're talking about the Whittlesea local government area, Richard, in the north of the Melbourne metropolitan area. Look, prices are still rising in those areas. There will come a point when, and probably sometime in 2019, where that price growth will dissipate. As to whether I expect prices to fall, maybe there's always a correction after a boom, Richard. It's a question of how much. If you take a long-term view, you wouldn't be too concerned about it. You know, if you bought, say, 5 years ago, you've had lots of growth. It'll come back a bit, but I don't think a great deal. These are the affordable areas where first-home buyers are active right now, and I think that's going to keep prices fairly solid there. So I wouldn't be expecting too much of a price correction there. Okay. Roberto's asking which areas of Canberra would be good to keep an eye on in the coming years. Look, I actually, up in the north, the Belconnen precinct is strong. There's actually sort of growth suburbs right across Canberra. The one that I like is actually outside the ACT, but it's really effectively past the Canberra, and that's Queanbeyan. A little bit more affordable than Canberra. People are buying there because it's more affordable and because you can access first-home buyer incentives available in New South Wales. It's actually quite close to the centre of Canberra, it's closer to the centre of Canberra than many of the suburbs of the ACT. It's a growth market. Demand is rising, prices are rising. I'd certainly be looking there if I was thinking about Canberra. Hilda says, I'm looking to invest in Geelong surrounding suburbs. Look, I would suggest, Hilda, that the best time to buy in Geelong was a couple of years ago. There's already been massive growth. Prices are still growing. You might still get some growth, but really the best time to buy there was 2 years ago, and you would have had great growth. If you're thinking Geelong, I'd suggest just adjust your thinking. Think of some other parts of regional Victoria that are a little bit back in the cycle compared to Geelong's, like a Ballarat and Bendigo. We're going to see good growth there for similar reasons to why Geelong grew, but Geelong's already had a large part of the growth it's going to get. So I would suggest adjusting and looking somewhere else. Okay, so just I think it's time to wrap up. We've been going for an hour and 10 minutes. Just to summarise, considering next year where to buy, where not to buy, what's happening in property markets in Australia, keep in mind we don't have one market. We have lots of different markets fundamentally driven by local economic events, and there are many locations around Australia where there's growth happening right now and will happen next year. Don't be put off by the headlines talking about prices falling everywhere. It simply isn't true. It's just bad journalism. Think small for big growth. The smaller capital cities and some of our better regional centres is where the growth will be found next year. Be driven by, in your research, by the growth drivers like the local economy, infrastructure, rising demand, population, etc. And keep in mind that some markets popular with tourists are not great places to invest. And I mentioned the Gold Coast high-rise apartment market as a prime example of that. Keep that in mind when you're on holidays. Don't be seduced. Think about the fundamentals of the location in which you're considering buying. And just finally, again, just referring to that opportunity of a strategy session, I think it's a great idea, particularly this time of year when you might be considering putting some time into thinking about buying an investment property over the holiday season, maybe even considering buying in the places where you're taking holidays. Before you do that, it'd be great to have a one-on-one chat with myself. You get a 1 hour one-on-one session via Zoom or Skype. That strategy session is normally $300 plus GST. This week only it's $250. We reduced it as a special pre-Christmas offer, and we're also adding, as part of the special offer, a free location report, which is normally valued at $55. Just keep in mind that the fundamental reason for having a session like this with an independent observer like myself, who knows a lot about what's going on in markets around Australia, it's not all about which location am I going to buy in or whether I've kind of buy, sell or hold property that I own in a particular location. It's about your overall circumstances firstly. Where are you currently at? what's your strategy, where you're trying to get to, what's your objective, and what's your strategy for getting there. That needs to be talked about before you make a decision about what you buy or what you might sell. So that's the great value of the strategy session. For a relatively small sum of money, you can set yourself up for moving forward as property investors for next year and beyond. So that's it. Thank you for your attendance. Thanks for everyone who's participated and listened in today. And those of you who weren't able to come in live, you will have the opportunity to listen to this presentation. Yeah. In the next couple of days, we'll be sending a link to those of you watching live, and those of you who couldn't, you're getting a link so you can watch it at your leisure. Thanks for your suggestions. We did focus on 5 of the best ones, and we awarded a particular prize for Cheryl, I think, who suggested Caloundra and the Sunshine Coast. Of the live questions that have come in today, I'm giving my prize, which is the latest edition of the Price Predicting Index to Alistair Boyd, who asked a couple of really good questions about statistics, which are the best statistics to focus on, and also, Alistair, your question about what are the top indicators and helping to choose a particular location, because most people just ask about, what do you think of this location? What do you think of this suburb? Really, I think you need to broaden your thinking and ask about what are the qualities that make a place a good place to invest. And so, Alistair, your questions, I think, got to the heart of that, those more intelligent questions that I think property investors need to ask. So, Alistair, we'll be sending you a free copy of the latest edition of the Price Predictor Index. And I noticed you've just typed in the question, Alistair, who was the winner of the best question? Alistair, you were. And so congratulations on that. Thanks everyone for participating. I've really enjoyed this presentation. I think it's an important one to have this time of year. Lots of people going on holidays, maybe thinking about buying an investment property, tire kicking real estate in the areas where you happen to be holidaying, and they're not always the best places to buy. So I hope today's webinar has been helpful in this regard. Okay, time to go. I've probably gone on a little bit too long, so I'll sign off now. Thanks for your participation. Best wishes to everybody for Christmas and for the new year for 2019. Hope it all goes well for you. It's Terry Ryder from hotspotting.com.au signing off. Let's do it again soon.